Hello everyone, this is Teacher Karen. So welcome to Organization and Management. Our lesson for today is Forms of Business Organization. Topics to be discussed: partnership, sole proprietorship, sole corporation, corporation, and cooperative. Introduction. After deciding to start a business and the business to pursue, one of the important issues is the form of business entity that will serve as the vehicle in pursuing the business. You may say that the next important issue is the source of funding, which is correct, but that issue will be discussed later. Right now, let's focus on the forms of business. The first one is partnership. Partnership. It consists of two or more persons who bind themselves, contribute money or industry to a common fund with the intention of dividing the profits among themselves. The most common example of partnerships are professional partnerships, like in the case of law firms and accounting firms. Just like a corporation, it's registered with the SEC, Securities and Exchange Commission. Advantages of a partnership: relatively easy to establish. However, time should be invested in developing the partnership agreement. With more than one owner, the ability to raise funds may be increased. The profits from the business flows directly to the partner's personal tax return. Prospective employees may be attracted to the business if given the incentive to become a partner. The business usually will benefit from partners who have complementary skills. Types of partnership. General partnership. Partners divide responsibility for management and liability as well as the shares of profit or loss according to their internal agreement. Equal shares are assumed unless there is written agreement that states differently. Another one is limited partnership and partnership with limited liability. Limited means the most of the partners have limited liability to the extent of their investment, as well as limited input regarding management decision, which generally encourages investors for short-term projects or for investing in capital assets. This form of ownership is not often used for operating retail or service businesses. Forming a limited partnership is more complex and formal than a general partnership. Joint venture acts like a general partnership, but it is clearly for a limited period of time or a single project. If the partners in a joint venture repeat the activity, they will be recognized as an ongoing partnership and will have to file as such as distribute accumulated partnership assets upon dissolution of the entity. Another one is the sole proprietorship, also referred to as single proprietorship. It is the simplest form of business and the easiest to register through the Bureau of Trade Regulation and Consumer Protection or BTRCP of the Department of Trade and Industry or DTI. It is owned by an individual who has full control authority of its own and owns all the assets as well as personally answered all liabilities or losses. The fact that it's run by the individual means that it's highly flexible and the owner retains absolute control over it. Advantages of a sole proprietorship. Easiest and least expensive form of ownership to organize. Another one, they are in complete control and within the parameters of the law may make decisions as they see fit. Profits from the business flow through directly to the owner's personal tax return. The business is easy to dissolve if desired. Disadvantages of sole proprietorship. They have unlimited liability and are legally responsible for all the debt against the business. Their business and personal assets are at risk. Maybe at a disadvantage in raising funds are often limited to using funds from personal savings or consumer loans. May have a hard time attracting high caliber employees or those that are motivated by the opportunity to own a part of the business. Some employee benefits such as medical insurance premiums are not directly deductible from business income, only partially as an adjustment to income. Another one is the sole corporation. A mixture of the feature of a sole proprietorship and a corporation is found in a new entity authorized under the revised corporation code, the one person corporation. An OPC or is registered in the same manner. OPC means one person corporation, as other corporation with the SEC, except that is composed of only one person, just like sole proprietorship. Other one is corporation. Corporation, it is a judicial entity established under the corporation code and registered with the SEC. It must be created by or composed of at least 5 natural persons up to a maximum of 15. Technically called incorporation, the 5-person minimum has been removed under the revised corporation code. Juridic, juridical persons like other corporation or partnerships cannot be incorporators, although they may subsequently purchase shares and become corporate shareholders or stockholders. Advantages of a corporation. Shareholders have limited liability for the corporation debts or judgment against the corporation. Generally, shareholders can only be held accountable for their investment in stock of the company. Corporation can raise additional funds through the sale of stock. Corporation may deduct the cost of benefit if provided to officers and employees. Can elect shareholders corporation status if certain requirements are met. This election enables company to be taxed similar to a partnership. Disadvantages of a corporation. The process of incorporation requires more time and money than other forms of organization. Corporations are monitored by federal, state, and some local agencies. As a result, may have more paperwork to comply with regulations. Incorporating may result in higher overall taxes. Dividends paid to shareholders are not deductible from business income. Thus, this income can be taxed twice. Cooperative. It is an organization established for the purpose of purchasing and marketing the product of its members. Example given is shareholders and or procuring supplies for resale to the members whose profits are distributed to the members in the form of patronage dividends, not on the basis of the members' equity. According to Republic Act 9520, also known as Philippine Cooperative Code of 2008, the primary objective of cooperative is every cooperative is to help improve the quality of life of its members. Cooperative shall aim to provide goods, services to its members to enable them to attain increased income, savings, investments, productivity, and purchasing power, and promote among themselves equitable distribution of net surplus through maximum utilization of economies of scale, cost sharing, and risk sharing. Provide optimum social and economic benefits to its members. Teach them efficient way of doing things in a cooperative manner. Propagate cooperative practices and new ideas in business and management. Allow the lower income and less privileged groups to increase their ownership in the wealth of the nation. Cooperate with the government, other cooperatives, and people-oriented organizations to further the attainment of any of the foregoing objectives. Okay, so our words of wisdom for today is we can see that all the desirable experiences that we cherish or aspire to attain are dependent upon cooperation and interaction with other sentient beings by Dalai Lama. Okay? So thank you. God bless and stay safe. Bye-bye po until the next video.